So to get started, actually there's something I want to mention up front that I'm going to talk about at the end of my talk. There was a very important event that happened on January 18th of 2024. I think it's going to have profound implications on how the world moves forward. You can stew on that and think about what it was, but I'm going to cover it at the end of my talk. But for now, I'm personally most bullish on, have been for a long time, uranium, gold, and copper. Uranium is in a bull market. It's in a confirmed bull market. Christopher Huggins, who's the president and CEO of C2C Gold. The chairman is Bill Sheriff, of course, and Bill needs no introduction. But I remember Bill and I started my trek that I believed uranium was going to move back in 2017. And of course, I was early, like I normally am. I'm always ahead of the game, it seems to speak, when timing these things. But because of Bill Sheriff, he introduced me to Encore Energy at 10 cents a share. And here we are 6 years later, and Encore Energy went over $6 a share just last month. I think it's at $5.63 right now. But I think in the last 6 years, the two best performing stocks have been Great Bear Resources and Encore Energy. And I've covered both of them right from inception. So as difficult as the market's been these last 6 years, there's still lots of opportunity, and we're going to talk about the contrarian nature. Gold is now a tier one asset. This is a game changer. This is why gold's at $2,080 an ounce, and yet no one seems to care about gold. Why is that? Because the Bank of International Settlements, which is located in Basel, Switzerland, which is the central bank to the central banks. In other words, when the central banks of the world get in trouble, they go to the Basel, Switzerland Bank of International Settlements. And they've listed gold as a tier one asset. That's a very important designation with what's going on in the world and why suddenly all these people who have been net sellers of gold, the most important financial players in the world, are now net buyers. We'll talk more about that. Very important distinction. Why gold is very high while silver and the other precious metals aren't doing much of anything. Okay. I'm also very bullish on copper. If you were here yesterday, you missed a really good presentation on a summation of why copper will soon, not quite there yet, but will soon be in a very important bull market. And Gwen Preston gave a great presentation on why. There's just a lot of discoveries out there, but so few of these projects can move forward because of environmental issues, because of permitting issues, blah, 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 on and on. There's very few of them that can actually go all the way to production. So the race is on to find new copper discoveries for sure. So my question is now, we've been in a tough market for a long time. I've been trading these things 45 years myself, the juniors, and the last 24 of which as a newsletter writer. It's been a great ride up and down. The first 12 years of my experience as a newsletter writer, when I knew a whole lot less than I know now, we were hitting it out of the park because those were the glory days when you just had to throw a dart at the board and you could buy the stock and probably do well. That's totally different now. In those early days, it was all about being a contrarian, and I was just fortunate to have read J. Paul Getty's autobiography, How Do You Make Really Big Money? He said, you got to be a contrarian. You got to train yourself to buy when nobody wants to buy. When there's blood in the streets and the market is absolutely destroyed, that's when you have to buy. So, as I've been saying, 2 years ago, we thought the bottom happened. Okay, well, timing-wise, the market got worse. And so I think the absolute bottom appears to have been December of 2023. So you have to, as this keeps going on, you have to keep realigning, reassessing your portfolio, okay? Because when the light switch turns on, and it's going to, it's not a matter of if, just a matter of when, and I think sooner rather than later now, we're getting close. When that light switch turns on, things happen so quickly. If you haven't reassessed and taken the positions you want, once it turns on, the biggest gains happen so fast you've missed it unless you were already positioned. So I can't stress how important it is to realign, reassess while we're in these bear markets. Take your positions that you want and buy the deals now. There's so many screaming deals. Every company on my panel is a screaming deal. Okay, if you look at the penny dreadfuls that have just been beaten up terribly, okay, you have to first understand, is the company going to survive? If you know it's going to survive, then it's a great value, because when this light switch goes on, and it will, that first move, that's where the biggest money's made. Most people are sitting there twiddling their thumbs. Oh, I guess it's time to invest now. Wrong. You missed it. You don't want to miss it. I gave a talk years and years ago, early on in my career. I always understood this contrarian nature that you have to trade these things, especially the junior mining shares. And I gave a talk at the newsletter forum at the PDAC, and this really sharp-looking gentleman came up to me afterwards and just said, "Greg, that talk, that should be talked about in all investment circles," because he said, "I'm a professional trader, and what you just said took me 14 years to learn as a professional." He said, "How much harder is it for the lay investor to grasp what this really means?" As Rick Rule always says, if you're not a contrarian, you're a victim. As a newsletter writer, I had several of the young newsletter writers ask me recently, "Greg, how do you keep subscribers? How do you build your subscriber base during extended bear markets?" I said, "You don't. You just don't. You're wasting your money if you try." And that's very disappointing, right? Well, if you market in a bull market when you can get subscribers, you're really setting those people up for a fall, because the market's at a high. And if they buy in at a high, guess what? They're probably going to experience some losses, and you're going to lose them as subscribers. But you can't get them now when they should be buying, right? Unless you personally take them by the hand. You just can't do a marketing program that brings in new subscribers in a terrible bear market. So what you really need to do is, during the bull market, you get them into the newsletter and you say, "Don't buy anything yet." And they're like, "What do you mean? The market's doing great." No, you got to wait till it goes back down again, and then you reload, right? Difficult as a newsletter writer to do these things. All right. So I want to just give an experience here. Just recent phone calls I've had about C2C gold. Just a month and a half ago, C2C was trading at 3-4 cents. Okay? And I said, "It's fine. It's a Bill Sheriff company. It's going to do great. Buy it." And so, suddenly Uranium company was put into the mix of the C2C projects that they have in the portfolio, and suddenly the stock hit 26 cents. Okay? And then I get all these people calling me, "Well, should I buy now?" What do you think? It's probably overpriced at that point. And guess what? The stock pulls back, right? To 16 cents right now. It's still a great deal, but it's not as great a deal as when it was at 3 to 4 cents, right? But people couldn't bring themselves to buy it at 3 to 4 cents. That's what you have to do. You have to train yourself and realize that right now is the key moment. How close are we? I'll explain. I think we're very close. So my strategy for trading junior stocks has changed in recent months. 24 years doing this. The shotgun approach of buying a cross section of these, usually I would try to somewhere around 10 to 20 some stocks. That's all I can handle as a newsletter writer. Anybody that says they can cover more stocks than that, there's no way. It's very difficult to stay on top of all these things for subscribers. But instead of the shotgun approach, which worked tremendously, especially those first 12 years, 2000 to 2012, my gosh, we were hitting it out of the park. Those were the glory days compared to the last 12 years, which have been dreadful, mostly bear market, right? Hard to get a big winner. And so what I've done in my portfolio, as I've realigned and reassessed everything, I've boiled it down to here's the best multi-dollar stocks. okay? My number one pick for years has been EMX, royalty. At $2 a share, it's a screaming buy. The value is unbelievable. So I have a list of those stocks because I have subscribers. Some only want the multi-dollar stocks. Some just want the penny dreadfuls. Some do a mix of both. But you have to understand where you are as an investor. What works for you? The multi-dollar ones that have less risk, or the penny dreadfuls that have high risk, high reward? And if you pull a great drill hole, you can get incredible leverage, as you know. So what I've done is I've pared the list down recently. I looked at all my penny dreadfuls between the two newsletters, and I'm boiling it down to just 5 companies. And I've already done so with the multi-dollar stocks, and so I'm covering a lot fewer stocks now. But what I'm saying is we want to take bigger positions in the best of the best companies that I've boiled the list down to, because I think that's how we're going to benefit as long as we do so. We realign and reassess our portfolios before the light switch goes on. So this is a fact. If you could buy within 20% of any bottom of any market or any stock and then hold until you sold within 20% of the top, you would represent less than 5% of the investors. That's how hard that is to do, okay? And I always remember that the speaker dinners, Rick Rule one time, he had a big hit with ATAC. And somebody was asking him at the speaker dinner, well, Rick, how come you sold out at $1? ATAC went from pennies to $9 with one drill hole. And he said, I don't know exactly, but his average position was somewhere between 5 and 10 cents. He said, I made over 10X. I'm happy, right? I don't care about what I leave on the table, right? He did incredibly well, right? And so you got to remember that too. Buy low when the blood in the streets and no one cares, and don't get greedy. Make sure you're making money. If you get a 10X and you don't sell, you're crazy, because we know how volatile these markets are and anything can change. And it did change for ATAC, and the stock went right back down again for other reasons. The interest rate question. What's happening is after the Vancouver conference, I polled the audience and I polled all the people that were there. I talked to them. And what do you think? When do you think the market's going to turn for precious metals, base metals? And they said, well, after the U.S. election. It's not going to happen until after then. Well, maybe so. I don't know. But I think there's a lot more at stake than what most people are considering. Is the Fed going to lower rates? Are they going to raise rates? Well, the lower rates that we hear from the Fed, that's just been lip service in my view. Lip service, it is an election year. They know if they talk that way, the Fed has great power when they say things, right? So they're trying to talk the market and the economy to remaining strong, good for real estate, good for general stock market, good for the economy. So the Fed says they're going to lower rates. Have they? They've had 2 chances to do so since they've been talking that way, and they haven't. They fanned, right? Well, there's Brookings Institute that believes that, no, the Fed can't lower rates because the inflation is running hot, even by their bogus measurement calculations, all right? That's a real problem, right? And so the Brookings Institute, which is a bunch of high-powered economists out of Chicago, they're saying, no, the Fed has to raise interest rates dramatically, like as in a 1979, 1980 Paul Volcker style raise of interest rates. They're saying they're going to have to raise interest rates maybe to 15, 16, 17%. Why? Because you have to slow inflation down. You have to raise interest rates above the true rate of inflation, which is nothing related to what the U.S. government says it is. Go to Shadow Stats and follow his work, and you'll see where the real rate of inflation is. So who's right? Who's wrong? Is the Fed going to lower? Is the Brookings Institute right? Are they going to have to raise dramatically? In my view, it looks like they're going to have to raise because that's what's in the best interest of the Fed, to give them the longevity they need. Why? Because currently nobody's buying T-bills. That's a problem. Right now, they have to make the Fed look like a third party comes into the market. The Fed's just funding it. But nobody, the foreigners aren't there to buy T-bills. Would they buy a T-bill at 15%? Maybe, maybe not, who knows? But if they could get somebody to buy T-bills, it might extend the longevity of what they're doing, okay? Whereas lowering interest rates and having a hyperinflation kick in could kill everything, right? Anyway, the bottom line is that, you know, this is a question. We don't know what's going to happen. I'm just a talking head. Like there's many talking heads. Who knows who's right, who's wrong? Nobody knows the future. But we come to these conferences to hear various people and we form our own opinions. Think for yourselves. That's what I always say. You've got to think for yourself and make the best decisions you can on the information you get, right? The US dollar situation is, in my view, it's finally here because without people buying for 50 years, the US could get away with its deficit spending into oblivion mode without any consequences because foreigners bought our T-bills and foreigners had to buy and hold our dollars in their central bank vaults to buy their what? Oil, the petrodollar. That's all unwinding very quickly now. That's where the game, I think, has finally reached its conclusion. Maybe not this year, but soon, within the next couple of years. Even the Congressional Budget Office of the U.S. has recently stated that in the next, well, by 2031, 100% of the tax revenue of the U.S., annual tax revenue, will be consumed by the interest it owes on its debt. Well, we'll get nowhere near close to that 2031 event before something dramatically has to change, right? And Richard Mayberry, in his December early warning report, said 90% probability in his view, and he's very conservative, he doesn't make these kind of calls very often, 90% probability the U.S. government will drive itself into the ground in the next 1 to 5 years. And he's leaning more towards the 1 year mark than the 5 year mark. So we'll see. Anyway, one last thing before I wrap up. I've been watching this guy on YouTube. He's a foreclosure expert. And I always watch what's going on in the California real estate market because it's always the bellwether for what's about to happen in the U.S. And suddenly there's massive, foreclosures starting. You're not hearing about this yet, but listen to this guy. He's a 40-year expert in the California market, foreclosure market, and he takes you with a video camera to the postings he's doing every day on houses that are foreclosing in Southern California, and he describes each situation and why it's being foreclosed on. Well, suddenly the banks are foreclosing on loans that have been going bad now for years, and some of these people are living in their homes, haven't made a house payment in years, but they're now being foreclosed on. He did 50 such postings last Wednesday when I was watching, he did 10 postings, right? And he was describing this one situation that, according to the market, the house should be worth $2 million, right? But they owe $1.3 million on, haven't made the mortgage payment in a long time. So at foreclosure, it goes to auction, right? The posting, once it's posted on the door, 20 days, and then it forecloses, right? Well, that situation is bleak for the homeowner because when you go to these auctions, you have to have certified cash ahead of time to be a bidder, right? Meaning you're paying cash. Well, these people aren't going to pay anywhere near what the value is in the so-called bubble market. They'll be lucky if they get $1.3 million to just pay the bank back. It's likely that it'll sell for less than that. So imagine this homeowner, they come away with nothing or at best break even, and they're on their own. They have no money. They have no equity. That's happening now in Southern California, and it's rapidly increasing. So we'll see how that ends up, but that portends that this is coming in the U.S. in a much bigger wave, more places. All right, so an important event. Anybody take a guess what that important event was, January 18th? Anybody? President Milei from Argentina went head-to-head with Klaus Schwab and the World Economic Forum. I want to use a bad word, but I won't. These people are vermin, these WHO organization and these World Economic Forum people, what their agenda is clearly not in your best interest. When they say to you, you're going to own nothing and you're going to love it, do you know what they mean by that? I'm not going to address that now, but anyway, I think it's the most important address since Patrick Henry's 1775 speech, "Give me liberty or give me death." Henry's speech eventually led to the system of liberty that spread around the world, and then it's been brought to a screeching halt by socialism, which, in my opinion, this Mr. Milei is a catalyst for some big things that I think are going to happen, and it's going to get interesting. I'm going to do a little, after the wine hour, I sit back here. If anybody wants to, and it's quiet in here at that point, if anybody wants to talk to me, ask questions. Up in Vancouver, we took 2.5 hours with a group of people asking questions. It was probably the best part of their conference, they said. And I'm going to address this issue about what they actually mean when they say you're going to own nothing and you're going to be happy. In reality, you're not going to be happy when you find out the answer. So that's it for me. Just go through here. Just my 2 newsletters and the Mining Speculator and the Insider Alert, discoverynexus.com.